the EFINA podcast. According to the 2023 Access to Financial Services in Nigeria survey, 26% of Nigerian adults are excluded, and that's a drop from 32% in 2020. Now, why is this important? Digital innovation through digital financial services have been instrumental in reducing that rate. And it basically provides hope for bridging the gap, the exclusion gap in Nigeria. But then there are challenges. The people who need this the most are the people who live in rural communities who don't have the infrastructure, they don't have the literacy and the skills to actually use the solutions. And so today I'm going to be having a conversation with someone who's going to do justice to the conversation around digital innovation, digital financial services, and what it means for last mile service consumption. And the person who's with me in studio today is none other, in my words, a digital payment czar. He's also a multi-sector hatted personality who is very passionate about technology and what it holds for social development in a sustainable manner. It's none other than Mr. Olu Akanmu, who happens to actually be an esteemed member of the EFINA board. Welcome to the EFINA podcast, which is a podcast that's focused on economic and financial inclusion in Nigeria. The goal is to illuminate the challenges, solutions, and advancements in the Nigerian financial inclusion and economic landscape. Thank you, Mr. Olu, for joining us.
Thank you, Chinana, for the invitation. Thank you.
Fantastic. First of all, congratulations are in order. You recently got appointed to the, I think, director of Lagos Business School, but it has something to do with tech and leaping.
A role as academic director of Lagos Business School, Technology Leap Initiative. Yeah.
Fantastic. Okay. And we're going to be talking about leaping and technology. But before I do that, there's a quick icebreaker. Imagine the year is 2045 and you see the news headline. What news headline would you like to see about financial inclusion in Nigeria 2045?
Happy people, beautiful country, children going to school, happy, farmers with bountiful harvest send their children to school.
And that headline
wouldn't matter. I'm telling the story.
Yeah, I see that.
Beyond the headline.
Okay.
I think the headline will be 21 years from today, we should have a Nigeria that is more inclusive, where prosperity abounds from either rural, urban, or wherever everyone is located. A Nigeria that works for everyone.
Everybody.
Which is not what we have today. And financial inclusion, payments, digital services have a clear role to play, not in isolation, but in complement with all these several initiatives in the ecosystem that will make sure that Nigeria works for many more people than we have today.
Absolutely. Okay. I think I'll take my headline from that and we'll document it so that in 2045 we can come back to this.
That's great.
Okay. So we'll go right into the questions. So in the introduction, I talked about the digital innovation that's driving the reduction in exclusion. But then there's also the concern about the challenges that the people who we think need them the most, the last mile population, they don't have the digital literacy and the skills, etc. And one could easily say that digital innovation in the financial service ecosystem is leapfrogging ahead of the development of the people who need them in terms of the skills availability. Now, what I know is digital skills and literacy are the bedrock upon which digital innovation is built on in any ecosystem. It's transforming the financial services landscape, but can we truly say that it's transforming the lives of the people that we care about who are the last mile populations?
I think probably we should reframe those sentences a little bit.
Okay.
There are realities that we see today that digital innovation has made huge impact on our people.
Agreed.
You only need to travel far outside many areas of even urban Nigeria. Even in we might have challenges in terms of financial inclusion in the Northeast, in the Northwest. But in many places today, people are accessing agency banking services. There are much more than at least 500,000 to 700,000 agents across Nigeria.
Okay.
In the remotest part of Nigeria. These are places where banks will historically have never got to.
Not gone to.
It is possible now to send money from here to Karanamoda and someone is going to pick it up through an agent. You could send money from here, from Lagos to Brass. to Abonema. Someone will pick up the cash. And it could happen within just 10 minutes to 1 hour, even sometimes even in 2 or 3, 4 minutes.
Okay.
Those are some of the realities. And it's not just about urban people. A lot of our people in our rural communities are using those services. So we've made a lot of progress as a country.
Right.
It's not perfect, but we should commend ourselves while also telling ourselves a couple of important realities. Like we saw during cashless, while we made a lot of progress, the fact is that a lot of our people are still excluded. And there's a lot to do. There's a difference between accessing cash through an agent, which is a lot of progress. We've done that very well in many places. But being able to do business as a micro SME, to collect digital payments and be able to pay someone, which cashless told us that we have not done well enough. And the EFINA data telling us that 47%, which is 1 out of every 2 Nigerians, do not have access to use a digital payment or collection service. And without that, will not bring a lot of our people into the wider benefit of digital financial services, because this is an MSME country, MSME economy. We need to bring a lot of our MSMEs into digital financial services. That's when they will see the real impact and will have the bigger economic impact, bigger transmission of economic impact on our people.
So I hear you. There's been a lot of gains with digital innovation in the financial services ecosystem. In fact, the data shows it. That's why there's a reduction in exclusion. But we can't ignore the fact that there's still a huge number of people who don't even have the understanding or the skills or the literacy to engage with those solutions as simple as we understand them to be, or even though it's recording successes in some place. And I'll give an example. So in Kaduna State, I recall that one of the big pieces, and when they were launching their cash transfer program and they're trying to get the citizenry to get digital ID, it highlighted the gap in digital literacy, because things that were taken for granted, even maybe interacting with the agents there were some gaps there, and they had to invest in digital literacy. And I think that's the missing piece, because we see these successes recorded, there's sort of an assumption that it's everybody should be able to understand this, and all we need to do is just make sure it reaches more people. So would you agree that there should be a lot of investment in building digital skills for these people?
No doubt about it. There should be a couple of things we should address in terms of usage. One, of course, it's designing products and services from the views and the eyes of the user. And also walking in their shoes. While we made a lot of progress, the fact is that we have to recognize that there are different, so that we don't use big jargon, but we sometimes have to use it. There are different kinds of demographics or different kind of user groups. So when I design a solution for someone in Kaduna, is could be very different from when I go further into 3 hours away from Kaduna, depending on the education, depending on what the person does or what they will use it for. So those are the areas.
Granularity.
Yes, those are the kind of things we have to do much better. But I don't think it's all about lamentation.
Okay.
In my previous life in telecoms, what you could see today is that everyone can use a phone. In those early years, when we started the mobile telecom business, it
far away from everybody.
Complex, a mobile phone. But today, everyone can use a phone through either a brother or a sister, or the knowledge diffuses. And if there's a benefit and a value that people will get, and the design of the product is simple enough, which are the lessons we can apply from telecoms into broader financial services, make it easy for anyone to do a financial transaction the way they will make a telephone call. If you can design a service that
simple,
we will get many more people to use. I think one of the challenges with financial services is that there is a way in which the mindset of people who grew up from banking think. The natural way until recently in which bankers think. We think corporate, commercial. We think Lagos, Port Harcourt.
Yeah, the universities.
And it's the difference that you see in the way the telco people think. The telcos,
because it's retail.
When they are launching a product from day one, they are talking of what we call massification. Massification will mean we're launching this product from day one. How do we get 25 million people to use it in the next 4 months? That's the way telcos think.
I like massification.
We need to get the financial service industry to also treat massification. So when you are designing a solution.
But isn't that what the fintechs are doing? Massification.
Exactly. Yeah. Those are some of the things that fintechs have done better. But even if fintechs are still, I mean, for example, I have a lot to do. One of the key things with our fintechs is if a lot of our solutions, for example, in Nigeria are going to be app-based. In a country where smartphone penetration is probably just 50%, or where internet usage and pricing is such that perhaps only 30% of people on the mobile telecoms network are using data regularly, and you see it when people switch off their WhatsApp. You call them or send them a message, they get it 5 hours later because they can afford they're managing data. If our fintech solutions are largely app-based, then we'll be excluding at least 45 to 50% of our people in our design, ab initio from what we are doing. So why fintechs have done well.
So they're not innovating enough then?
Fintechs have done well, but a lot of the progress has been about serving the underserved, those who banks have underserved.
Okay.
But fintechs have to do much more in terms of serving the excluded.
Banked and excluded.
And there are a lot of data that you see when you look at percentage of customers serviced by fintechs outside banks. Former financial inclusion is 64%. The banks are probably doing about 55% of that, or 52% of that. The rest are done by the fintechs. Fintechs are significantly overlapping with the banks.
Because they're serving the same customers.
The extension of a financial rail that's been done by a fintech exclusively. Those who are not doing banking services, who are not using bank services, but are served by fintechs alone, is just about 7-8%.
So very
that tells you that we have to shift in terms of our design of our solutions. While fintechs should serve the underserved by banks, we have to do much more in terms of extending the financial rail to the excluded. And that's the difference between Nigeria and Kenya. The fintechs in Kenya are extending the financial rail
to the
excluded much more than we are doing in Nigeria. And we have to get our fintech colleagues to wear a lens that goes beyond Lagos, Abuja, Port Harcourt.
I wonder if that's a conversation around cost and infrastructure. So if you look at Kenya, maybe the arguments for the fintechs would be, well, the regulators should have the necessary infrastructure that allows us to go into those areas. Could that be one of the barriers? Is it for a lack of not wanting to go into those locations?
Both of them. There are infrastructure issues. Yes, of course, we need to get internet connectivity, yes. But internet connectivity today will reach maybe 60%, 70% of Nigerians. But the issue will be pricing, for example. On the pricing side.
Is it reaching already? I know as at last year was 48%.
Maybe, but I mean, we'll be pricing is a major reason why they are not. In terms of where you can access internet today in Nigeria, I would say that given what we have as infrastructure, that's more of a mindset issue. Because you can use the USSD rail, for example, if we want to be intentional. To reach the excluded. Now, it might imply that we need to have a better cooperation between the telcos and the and the banks
and the financial
and some of the altercations that we are having that are not in public interest. We need to get the regulators on both industries to cooperate in public interest, where we are putting society interest first before the interest of the industry. Industry must align with society.
That's
the only way to have a sustainable business. So a mindset issue that if we are doing technology and is to have the biggest impact on our people, it cannot just be about doing well in Lagos, Port Harcourt, Abuja, and no one knows about our services in Maiduguri, in Kaura Namoda, in Abunema, in Potiskum, and so on. So
some people have never heard of those places.
The social purpose of technology have to be bigger discussion in our tech community. When we say you have a unicorn valuation, are you having yes, that's a commercial, are you having a unicorn social impact on our people in terms of impact in Nigeria? Those are conscious issues that we are making a lot of progress, but we have to do much more to balance social purpose, social impact, and commercial benefits to the business in fintechs.
Fantastic. Hopefully we'll find that balance sooner rather than later. But the thrust of this conversation is sort of hinged on consumer protection. And the reason we're talking about this at EFINA is because, as we see, digital innovation is evolving, so within the financial services ecosystem, and we see why it's important. But there's a concern also around the risks that it poses to these consumers, and in terms of the risk exposure to digital fraud and all of those things. And because of their level of education and skills, etc., we think that it could potentially impact on their trust, which is the key currency, in engaging with any financial system. So how do we make sure that the consumer feels protected and that trust is protected? And, you talked about having access to digital applications or devices through other people. I think that in itself presents some risk because you're now depending on another person. We need to get to a state where I can conduct those digital services by myself so that the risk is entirely on me, and there's no risk of somebody else taking my details. And so question, how do we make sure that these people get that kind of protection? And this will be the last question.
We talk about infrastructure, but we've made a lot of progress as a country, but sometimes we do not even recognize it. The foundation block for inclusive digital system, financial system, is identity, digital identity. And it's also the foundation for a trustworthy financial system in terms of building trust. Who am I sending money to? Who's receiving the money? Who's sending money to me? Can they be digitally identified uniquely in the digital system? 7 years back, it used to be a challenge. But over the last 5-6 years in particular, we have made a lot of progress in Nigeria. We have to commend the National Identity Management Commission. We now have 107 million Nigerians today with national digital identity. Sometimes we don't recognize the implication of that. What that means is that today, and CBN has made that move, no one should send money to anyone without knowing clearly, without being able to identify clearly by KYC who they are sending money to. And if we use technologies like biometrics that are available today, that can easily use your fingerprint and so on, it is possible with the identity system that we have today, which is inclusive, to build a much more trustworthy financial system. And everyone needs to align to support the directive of the regulator that today there's no excuse for anyone not to have a tier 1 KYC. Now,
so to remove tier 2, tier 3,
we can do tier 2, tier 3. Most people who wants to send money, that's another dimension. There is a whole social justice issues about cross inequality in Nigeria. 80% of our people, what they are sending is 5,000 and 10,000 and 20,000 naira.
That's a very low value transaction.
A lot of those things can be done within the basic tier 1 digital identity program. And that means sending money to most people shouldn't be a problem. Paying 20,000, 30,000.
They're increased fraudulent activities. So
now,
people have
is now the enforcement of the rules. Players have to implement those compliance rules on KYC. Now, coming from someone like myself,
Yes.
our tech community sometimes, okay, is it right, is it not right? But it is in everybody's best interest for us to build the highest level of compliance in terms of KYCs. We have no excuse today. Everyone has that matters. Most people that matters have a digital identity. Let us comply, implement those KYC systems. We'll build a much more trustworthy system and implement the rules such that you have explanation to give. If someone who is not supposed to collect 50,000 collects 50,000, and if that person who is collecting 50,000 is not the person whose that money has been sent to, how did that get through your system? Those are some of those things we have to do, commit to, work with our regulator to implement. We can build a much more trustworthy financial system on the basis of 107 million digital identities that we have in Nigeria today, and build maybe next third layer on top of it, but it could be much better. It's probably not sounding right to our tech community. But on the long run, it's in everybody's interest to build that trustworthy system.
Absolutely.
Because we have 107 million Nigerians today with at least NI.
And that's fantastic and a great achievement. But, my ID campaign is focused on the most excluded. And there's still people that have a challenge getting ID.
Sure.
And so if this is a key requirement for the kind of trust we want within the financial services ecosystem, then it means that even making it possible for people to have access to that tool that would engender that trust is very critical. And that's why that cross-regulatory conversation needs to happen, NIMC and CBN and NIBS and all of them, which is what we're hoping to see. We don't think we see enough of.
I think it will be, if you take a momentum view of the progress we have made digital identity.
Yes.
On the average, over the last 5 years, we are doing 15 million new additions on the National Digital Identity Platform. If we continue to move
at that rate,
and also tie the complement of tie identity to telecom use, we probably will be able to get to reach many more people.
We will be able to
get to reach many more people. There's no, the data this year, in my view, is not suggesting that progress is slowing down. The NIMC has not published new data.
No, they haven't.
If I recall what they published in April, 7 million, 3.2 million more people have been added in the first quarter of this year, January and April.
But there's a school of thoughts that we may have picked in terms of, giving access to the people in the urban areas that have access to it. And maybe there's a possibility that it will slow down even more because you have to then have a targeted approach for reaching the people in the hard-to-reach communities.
Especially the
difficult communities.
But while we are doing that, we have a gap of 40 million people. Total number of financial accounts in Nigeria estimated probably will be 65 million.
To ID ownership.
We have 7 million people with digital identity. So there are at least 35 million people out there who have digital identity. They don't have a financial account. Now, while we are looking for the extra 10 million, the one in our face, low-hanging fruit, we have to get financial community led by our regulators, NIMC, NIBS, who controls the universal payment interface, and find these 30 million people who have identity already. They are a low-hanging fruit, and bring them to the financial system. And that's a very interesting dimension to it. We have failed as a country to do credible social investment program. We have tried to do it, it has been abandoned. The 30 million people who have digital identity, who do not have financial accounts, they probably correlate to the people that need cash transfers,
which is what Kaduna did.
So if we can get NIBS, NIMC, some progressive social conscious fintechs and social conscious banks to work together, led by the central bank, we can set a target over the next 2 years. We'll find these 30 million people who have digital identity, who don't have financial accounts, and bring them to the financial system very quickly. Because we know their phone numbers. We know where they live. The data are there. So building on, of course, with data privacy, we have basic information to find them. And it's something that can be done. But if we don't see what is a low-hanging fruit in our face. And we keep talking and having these conferences and so on. We probably will be moving the number of people financial accounts at 1 million, 2 million every year. But the 30 million in our face, where the social impact will be biggest, where we'll have better alignment for the economic reform program, because the people who are most pained by economic reforms are the people who are on the lower income side.
Absolutely.
Let's make sure there's a cash transfer rail that can deliver social investment to this program creditably and auditably. Where for the Ministry of Finance, they can press a button and 20,000, 15,000 can be delivered to 30 million people on a monthly basis.
That's the innovation that we need.
But it will need
collaboration. Absolutely.
NIPS, key platform, UPI, as a universal payment system. Payment interface, NIMC, banks, fintechs, CBN, and the Ministry of Finance. But the first thing is recognizing that there's an issue. There's not enough recognition
and acceptance
that this is a 30 million low-hanging fruit opportunity that should be top of the agenda, agenda. Let the Ministry of Finance, CBN, NIPS and NIMC come together and set up project. Over the next 2 years, we are finding these 30 million people who have digital identity to make sure they come to the financial system.
Fantastic.
Top priority agenda.
I completely agree, and you've spoken so passionately, as expected. Thank you so much. I mean, I wish we could take more, but this conversation is one of those ones that, as you speak, there's so many topics in between, and I think with this platform, we will continue to explore the conversations with the relevant parties. But thank you so much. The summary for me is collaboration and designing for the people who need it the most in mind. I usually say design for the poor in mind. When you've designed for the poor, you've designed for everybody, and that's where we need to be. But thank you so much. And any last words, parting words for us?
To all our friends and colleagues, everyone out there trying to make a difference, keep up the hard work. We are making a lot of progress. There's still a lot to do. But we mustn't give up. We can have in Nigeria that works for many more people, and it will happen. And we will see it soon. Let's not give it up. Let's keep pushing.
Let's not give it up. Thank you so much, Mr. Olu. Thank you for joining me on this conversation. And at EFINA, we aim to achieve last mile progress in financial inclusion, because when we achieve for the last mile of the poorest, we achieve for everybody. And we'd like to continue to keep this conversation at the forefront to make sure that the people who need to do something can hear it and hopefully pick something in their conscience to do something and work together with the relevant parties. Join us on the next episode of the EFINA podcast. Thank you. The EFINA podcast.